All right, good evening. It is after market close Tuesday, July 8th. I'm trying something new here, working out some systems. Apparently, I got a lot of resources and I'm just learning about them. So here we go. I want to show you a few things that I have prepared because the last week or so has been a really news-packed week. So we've got a lot of information about rates. We've got the Trump's big, beautiful bill. And today we got some information about credit score models. So let's break that down as quickly as possible. Number one, let's talk about interest rates. So refinance opportunities are here for some, are getting closer for others. So all indicators are saying, experts, they're saying September is when they could see a possible rate cut. So what I have here is a 30-year fixed mortgage, so conventional mortgage, this year, so January until today. You can see the low, these are averages as well. So anytime you see rates online, it's really important to make sure you note what exactly you're looking at. And when you ever see averages, it's highest credit score possible, it's 20% down. Typically speaking, there's at least 1 point involved. So usually the average, and especially what you see on the news, can show a little bit lower than what you actually might be quoted from a lender. So keep that in mind. Take this with a grain of salt, but it's an indicator. So that's what we're looking at here. I like this site, Mortgage News Daily. You can access it yourself. But again, these are going to be averages. They're not going to be a rate that you might be quoted by a lender. But here in April, we hit our lows for the year. So got down as close as we've been to 6.5 in a while as an average. So that means if you've got really great credit, you might be below that. Maybe if you have lower credits, you're above that for a conventional mortgage. But that's really what we're trying to break. We almost got there just before the holiday. We were at 6.67. So very, very close. It was, 2-month best, but not quite there yet. But you can see it's really trying. The market wants to come down. There's just other factors in the world that affect interest rates that people don't often understand. World conflicts, they have a factor. Reports like the jobs report that came out and that exceeded expectations on Friday, you'll see that right there is why we jumped back up to just about 6.8% on the average for an for a conventional loan. So whenever economic reports are due out, and then they exceed expectations, that's not usually a great thing. The market loves stability. The market loves meeting expectations. And so they want to guess correctly. And when they don't, they react. And we went back up the wrong direction a little bit with rates. So, but it's really, really trying. So this is why it's so important. Things can change on a dime. So it's really important to make sure that we keep in touch with whoever's representing you. So if you have an interest in refinancing soon, call me. Let's set up something for you, especially in the state of Texas where Clubhouse Lending is licensed. But we want to make sure we put together a strike rate. So we know, hey, this is what my goal is. This is how much money I want to save. As soon as the market gets there, then we've got to be locked and ready with an application to be able to lock your rate once we hit that strike rate that we set you for your budget goals. So that's really the best strategy to make sure you take advantage and buy those dips when we do get them. Now, you don't want to refinance. So we want to have a good plan in place that's going to work for you. So let's take a look at FHA rates. They typically are lower. So what we're seeing here back in April, we're right here at almost 6%. So really it's almost about 0.5% better in most cases. And then this is what happened just last Friday. Went from about 6.2 right back up to 6.3. So lost about 0.1%. Now, let's talk about the big, beautiful bill. So whether you like it or not, it's a controversial bill, sure. But there are some real estate measures that need to be taken into account. So when you buy a home, especially on something like an FHA mortgage, you have mortgage insurance, or you've often heard it called PMI. You have some closing costs on an FHA called upfront private mortgage insurance. These are now things that are locked in place. They're not going anywhere. You can deduct from taxes. So these are the key housing provision. So this is the biggest one, is it makes permanent mortgage interest deduction. You can now permanently deduct mortgage insurance premiums. So now it's subject to income limits, but for the most part, most people are going to be able to take advantage of this. It's really, really helpful if you have an FHA loan, if you put down low down payment percentages, because you're going to be able to save on your taxes. So just another extra little thing on the budget that we can use the house for. Going into another realm on the kind of the other side, maybe a little bit higher priced homes, especially in high cost markets. $750,000 cap on mortgage interest deduction is now permanent. So the deduction is capped here. They were kind of worried about that. There was no expansion to it, but it stayed the same. So you can plan around this limit now, knowing that, and it is set in stone as law. So another one, there's really no new federal down payment home buyer assistance grants or anything like that. But it's really mostly what it set in place was for taxes and deductions. So SALT stands for state and local tax. The deduction cap was raised. So instead of only having $10,000, you can go up to $40,000 per household. Now there is a time period on it, but we have a little bit of time to work with, that you can use to another little deduction to try to get a bigger refund back at the end of the year. If you're self-employed, to try to have that much extra tax savings, so you're not really getting hit twice. So high tax states, this is going to be really, really important. Another one that I want to highlight too, for real estate investors, permanent deductions for qualified business income. This is going to help if you have rentals, and then it does not touch the 1031 exchange. So 1031 exchange stays in place. There was some fears that might go away. The 1031 exchange helps save on having to pay capital gains on taxes if you are to sell an asset. So those stay put. Now, bigger news today is about credit scores. So you're probably aware of FICO. You probably have no idea it stands for Fair Isaac Corporation. But check this out. This is FICO's all-time ticker, their stock price. For a long time, it was just kind of here. But then bang, just around COVID, look at that thing go up. But you're seeing some decline now, but it's also going back up again and then back down now. So this is a big deal because they've had a monopoly on the credit market. So if you've heard of the Experian, TransUnion, Equifax, those are the credit bureaus in a tri-merge credit report that go into loans. So if you have to get your credit pulled to get a loan, you have to have a certain credit score to meet the certain mortgage product requirements. You're going to pull a FICO credit report. Well, as of today, Secretary Pulte, FHFA secretary, he came out and said, now lenders are able to use a Vantage 4.0 score. So this introduces competition into the credit space, the credit bureau space. So you can see here, and this chart's not really working, but Vantage is another one you can follow and track. But the reason I like to show this is because they were unchecked. They had no competition. And then you start seeing they started rising costs of credit reports. So if you're buying a home or buying a car, you're going to get charged this credit report, whether I as a lender pull it early and then have you reimburse me at close, or if you pay for it, you're going to pay for it upfront or at closing. So having competition hopefully will reduce the cost of these credit reports, therefore reducing closing costs. Credit reports used to cost $20 just a few years ago, and now they cost over $100. So they've really been racking this up. And then keep your eye out too for credit trigger leads. This is where you have to pull this credit report, and then the bureau sell your information without your permission. They make extra money on that. So there's a law that just passed the House and the Senate. It's got to get through reconciliation, so it's not a bill yet. But keep in mind that that is on the horizon as well. And hopefully we'll keep these guys in check, bring a little honesty to what really has been kind of monopolist over the past few years. So that's my update for today. Hopefully this recording works. Next time it'll be shorter, and little bit more organized. And please follow the channel. We are trying to put out information and content, especially for those who want to be in real estate, whether you're an investor, first-time home buyer, or anything in between. We are trying to give detailed information in reality, grounded in reality, so that you have proper expectations and proper preparation so that you can be set up for success and start building wealth through real estate, which is what we're all about. Our company is called Clubhouse Lending, and we would love to be able to talk to you, see if we can help you out. Have a great day.